One of the most common questions we get asked as accountants is, should I be a limited company? In the UK, the vast majority of businesses are either sole traders, partnerships, which are similar to sole traders with just more than one owner, and limited companies. Making sure you choose the right entity type for you can make a big difference. And in this video, we're going to explore some of the most important factors in deciding whether a limited company is for you. In this video, I will often refer to the difference between limited companies and sole traders, but for the most part, the comparison I make will also apply to limited companies versus partnerships as well. One of the big attractions for being a limited company is the fact that a company is a separate legal entity from its owners. This provides a level of protection to the owners of a limited company, whereas for a sole trader, their business is not legally distinguishable from themselves. This matters because when a company has a debt, that debt is a debt of the company alone, not its owners. For a sole trader, that debt is the debt of the owner, even though it was incurred by their business. If a company can't afford to pay its debt, then any claim is made against the company, and only the assets owned by the company are potentially claimable to settle that debt. For a sole trader, anything the sole trader owns, including the house they live in if they own it, is up for grabs. A limited company can be a great way of reducing the risk to the owners of a business. Typically, risk increases the larger a business gets. The more employees it takes on, the amount of finance it requires, or simply from the nature of the work that it does having a higher level of risk. Many people choose a limited company for this reason alone. Another attraction of being a limited company is the tax benefits compared to being a sole trader. Now, whilst these tax benefits are being gradually eroded by the increased tax rate on dividends and the increases to corporation tax, they are still there for many businesses. As a sole trader, you pay tax based upon the profit that you make in a year. Once that calculation has been done, there's nothing you can do to alter the amount of tax you pay. If you've had a good year, then you could be paying income tax at 40, 45 or even 60%, and there is very little you can do about it. A limited company gives you a better level of control over how much tax you pay. The company itself will pay corporation tax on its profits, and as the owner, you will also pay tax on the money you take out of the company. But you have control on how much you take out. You can leave some money in the company if you don't want to take it all out and pay the tax on what you take. This can be a great strategy to avoid paying those higher rates of tax. Now, it's true, you're paying two lots of tax, company tax and personal tax. So it seems like you'd be paying more, but the way it works out, it can often be less due to the way that sole trader taxation works, being a mixture of income tax and national insurance. Commonly in a company, the director or owner will take a small salary, which is enough to earn them a year's credit towards their state pension, but is not enough to actually have to pay any income tax or national insurance. This salary is also tax deductible for the company, so the company doesn't pay any tax on the salary either. They then take the remainder of their income as dividends, which don't attract national insurance. Now, corporation tax rates in the UK are changing from the 1st of April 2023, when they will move from a flat rate of 19% to a sliding scale between 19 and 25%, depending on how much profit the company makes. The more profit, the higher the rate of tax. However, the rate doesn't start to increase from 19% until profits exceed £50,000, so many smaller businesses will be protected from this rise. Staying on tax for a moment, one of the other benefits of being a limited company is that the different relationship the owner has with their company compared to being a sole trader opens up a few additional tax benefits in the form of trivial benefits. These are small things that your company can pay for which benefit you personally and still receive a tax deduction for. The amounts involved are not significant, but if you take advantage of them every year, the benefits do soon add up. Now, cash flow can be difficult for sole traders trying to manage their taxes. Most sole traders are going to be paying taxes twice a year, in January and July, and are paying those taxes partially in advance using estimated liabilities. One of the consequences of this system is that if you have a good year, your tax payments seem to go up even more than you expected. Companies are different. They pay their corporation tax in arrears 9 months after their year end in one single payment. This can make it much easier to plan for and save towards your tax payments compared to being a sole trader. As we've already mentioned, the owner-director will still be paying personal tax on their dividends, but this may not be high enough to have to worry about making the advance payments sole traders often do. And if it is, then the payments are going to be much smaller than when you were a sole trader, making the whole thing much more manageable. The cash flow benefits of being a limited company are a really strong benefit of operating as a company. Another smaller but still relevant benefit to being a limited company is the sense of legitimacy and professionalism using a limited company brings. People still look at companies as being more legitimate than sole traders. Being a limited company still has a level of prestige and suggests a successful business. It's the same with businesses that are VAT registered. Whilst on its own it would rarely be the sole reason to become a limited company, it can still be a powerful benefit if some of the other factors weigh in your favour. Now, we've talked about some of the benefits of being a limited company. Let's talk about some of the downsides, as there are important things to consider. Companies tend to be more costly to run than a sole trader. Companies have considerably more regulations surrounding them, which if you're not knowledgeable enough to deal with, you're going to have to get someone to help you, such as an accountant. A large proportion of our clients are limited companies for this reason. Companies have to file their accounts with both Companies House and HMRC, along with a corporation tax return and computation. These require careful tagging in a specific format to be submitted, which is both time-consuming and complex. It is possible for smaller companies with simple tax affairs to submit their accounts and corporation tax through HMRC and Companies House's online services, but you've got to know what you're doing. And this is still likely to be beyond most people who do not have the detailed understanding of company taxation and accounts formats that we do. Companies must also follow accounting standards which determine how they prepare and format their accounts. These accounting standards are constantly evolving and can be quite complex in certain areas, even for accountants. There is often still debate in some areas as to how to apply certain standards. Companies House and HMRC expect these standards to be followed, and so if you're not an expert in these areas, again, you're likely going to need an accountant to help you. While sole traders have more flexibility in how they keep their records, companies do need to use a double-entry bookkeeping system and will typically have to incur the costs of software to provide such a system and have someone to post the entries and maintain the system. Good bookkeeping is a skilled profession. Good bookkeepers are often well trained and have years of experience honing their craft to get better at what they do. When bookkeeping is done by someone untrained, it can often be quite challenging, prone to error, and costly to fix. This is why many businesses outsource their bookkeeping to ensure it's done correctly. At Cunningham's, we have a team of highly trained and experienced bookkeepers who help to look after the accounting systems of a wide range of businesses. While some of our clients do all their own bookkeeping, we work with many to either support their own efforts with the more difficult aspects or carry out their bookkeeping in its entirety, leaving them to get on with running their business. One of the other disadvantages to a limited company is that they can be more costly to close down than a sole trader. With a sole trader, it's usually simply a case of logging a cessation date with HMRC on your tax return, and that's largely it. With a limited company, there is often planning required as to how best to wind up the company, and there may be a need to get a liquidator involved, which can sometimes be very expensive. For this reason, businesses don't often switch back and forth between entity types on a regular basis. Once you have a limited company, it is often better to commit to that. So now we've talked about the pros and cons, the question now becomes, should you be a limited company? Obviously, it's impossible for me to know your exact circumstances, and general advice can never be a substitute for seeking advice from a professional on whether or not to incorporate. At Cunningham's, this is something that we regularly look at for our clients. But as a general guide, if you're a sole trader with profits of around £25,000 per year or higher, then it is likely that the benefits of being a limited company will outweigh the costs of running that company, and so it is worth considering. As you will have realised, some of the benefits of being a limited company are not money-led, and so even some sole traders with lower profit levels than this find benefit in trading through a limited company. This is a complex area, so if you'd like to have a chat about whether being a limited company is suitable for you, there is a link to the contact page on our website below in the description, or we're happy to answer general questions in the comments section below. I hope this video has been useful. If so, then please do give us a like below and subscribe to the channel if you haven't already to make it easier to find our content in the future. Thanks for watching. We hope you've enjoyed this video and found it useful. And remember, sometimes just one thing is all it takes. See you on the next one.